started. So thank you everybody for joining us today. We are having our first AIN workshop of the semester, and we hold them every month, and we feature our advisors here at Arrowhead Center, and we have them come down and talk about one an area that they have their expertise in. So today we have Bobbi Kay Nelson. She's with Atkins Accounting Firm in Albuquerque, and today she's going to talk to us about when to hire an accountant.
So one of the reasons I come down here to advise is I'm going to call and say, I don't know if it's time for me to hire an accountant. That's at least more than 50% of the questions I get asked. And I thought, it's probably a good idea to kind of open that to a wider audience. And it's something that it's an area that I think it's not just for startup companies. It's even for long-standing companies. We got a client in our firm this week, and it's some folks that have a roofing company in their house, New Mexico, and they've been in that business for over 20 years. And they've kind of handled it all themselves, and they've been doing great, but they're at that point in their business when they are ready to start thinking about retiring, and their own grown children, and some of the grown children have expressed an interest in continuing on the business, and so they decided, okay, well, we're going to sell part of our business to our kiddos. And so now we're not just going to be sole proprietorship. We're going to have more people in that. So what do we do with that, and how do we handle this? And they decided now is the time that we need to look at getting an accountant to help us with all this activity. So it's not just for startups. It can be for continuing businesses. But, it's a good question that people should always ask, even if you've been doing it for a while. You still need to be using an accountant. What if you use your accountant because you weren't sure how to do your income tax return? But back in the day when I started doing income tax returns, you did it by hand. But for clients, you got a 1040 and you programmed it and then filled it in with pencil, and you made copies, and that's what you gave your clients. And now we have TurboTax, we have HR Block Online, and we've got all these different services. They're actually really good services. They ask really good questions. I got a client call the other day. The reason she wanted to visit with our firm is because the TurboTax didn't have a question for R&D tax credits. So she needed information on that. So, those are really good tools out there. And so if you're comfortable with it, it's doing what you need, then that's one of the reasons you don't necessarily need an accountant. So, okay. But do I do the arrow guy?
Yes.
Okay. We're going
other direction.
Other direction?
There you go.
Yay. Okay. Okay, so I looked at lots of different websites, read some articles. I know personally what I think are areas where we need to hire an accountant, but I wanted to see what other folks thought as well. So some of the main items that I saw was when you're developing a business plan, when you're trying to consider what legal structure should I do, and what does that mean if you're having to get a loan, or if you're wanting to explore the option of getting a loan. Do I need a startup loan? Am I buying a property that I need a building loan for? Do I need a line of credit? Those kinds of things. Government dealings. When I say government dealings, that means income tax returns. That means sales tax returns. That means licensing in the jurisdiction where you're doing business. And that means licensing for business purposes as well as for your professional credentials. What you do for a living, do you need to have a professional licensure in the state that you're in the community that you're working in? So those are the things you need to think about as well. Your business has decided to start growing, and it's becoming unmanageable, or you're starting to feel overwhelmed. You feel like things are getting out of control. You don't remember all the details that you remember last month before you got this brand new contract. Those are areas to think about. You've made money and you want to sell your business. What do I do with that? How do I do it? What kind of questions should I ask? So, talking about a business plan. And starting out this business, you're going to put your heart and soul into that business plan. And it can be very technical. And so you want to, at the end of the day, you want to throw it out there and you want to say, okay, another set of eyes. Can you please look at this and tell me what you get out of it? And what you want at the end of the day is somebody, whoever's looking at this, whether they have the same technical background as you, whether they have the same business acumen that you do, or the same level of education, that when they're looking at this business plan, they essentially get what you're trying to accomplish. What is it that you want from this business plan, and are you conveying that? So it's always important to get another set of eyes at it. And hopefully this other set of eyes can be somebody that has done this kind of thing before and has some experience looking at business plans and can give you some ideas on how do I make this better? How do I make this really pop out and tell my audience what it is I really want to accomplish? Financial jargon. You want to cater to business plans, you want to cater to an audience. So you're meeting with somebody that is very technical, very high tech, and you know and you've heard that they ask very pointed questions, or their expectations are that your business plan is going to include certain areas that deals with financial terminology that you're not familiar with. It's important to get somebody else to help you through that. And just ask some questions and say, okay, what does return on investment mean? Okay, what does return on investment mean for my business? How do I write that up? How do I convey this so that this person over here that's talking about it, that they understand that I get it and I know how to accomplish this. And then the other thing is, I always say, if you're a technology kind of person, if you're a very detail-oriented person, you're going to prepare a business plan or a letter or whatever it is you're doing. You get down into the nitty-gritty, into the details. And so you need two kinds of systems. I was looking at something more big picture people, look at the vision, and then you also want the details. Or if you've got a partnership, and you've got different people in your group that have different skill sets. Everybody should put towards the end product where their best skill sets lies. Because you're going to have some folks that are they're visionaries. They are just these amazing people. I've got this group of clients. They're actually, well, the reason I say they're a group of clients, they're these three guys, and they're late 20-somethings, early 30-somethings, and each of them has 3 to 5 businesses, and very profitable, growing businesses, and they're going all over the place all the time. And the interesting thing is, they've got two of the 3 are visionaries. They come up with an idea and they're going. Fortunately, one of the third partner, he is more technical. He likes to, I guess his role really is to slow down and say, okay, let's stop and think about this, and make sure that what you're visioning is we're able to accomplish. And the same thing goes with the business plan. You want the details, but you also want to make sure that your big picture, your vision, that thing that helps you sell and tell the world that this is what I'm doing, that is being conveyed. So now that here comes the one thing. Everybody thinks, I'm going to be an LLC. Every time I come over here, everybody's going to be an LLC. And then the question is, why? Because that's the best one to be, don't be an LLC. Well, it may not be the perfect fit for you, and hiring an accountant or just getting some advice on, is this really the best fit for me? And they're going to ask you questions like, how many people are going to be involved in your business? Are these people going to be owners in your business? Are these people going to be workers? Are they going to be advisors? Do they want to be owners? At what level do they want to participate in this business? And what you need when you're hiring an accountant or you're looking for that particular level of advice is somebody that can step back and not get regulation is that an entity choice. If you're an LLC, that really what that means is that the state of New Mexico, if you're in New Mexico or the state of Texas, it's something you're doing in Texas, they have their own definitions of what these entities are. And they tell you, if you have this, and this, here's all the rules, here's the regulations, this is what makes an LLC in the state of New Mexico. But then you have this other thing over here called federal income tax. And federal income tax says, okay, if you're an LLC, you have to think about these other things. How many people are in your LLC? Well, there's me. Okay, well, you're a single member LLC. What do you want to do with that? Do you want to report as a sole proprietor? And that means that basically what you're doing is just filing a Schedule C on your individual income tax return. You don't need to worry about a business income tax return. But do you want to do that? What are the risks to me? What are the things I need to worry about if I do that? In New Mexico, the worry that you have on that is something called New Mexico Taxation and Revenue Department, because they have this thing called matching. And so every I think they're on a 3-year cycle right now, the IRS sends them your 1040 information, everything you filed on your personal income tax return. Plus, they've sent all the 1099 information. So if you have a Schedule C that you have filed with the federal government, and it says you made $125,000, that's what you're showing as your gross revenue on your Schedule C. Well, then your CRS1 better show you your gross receipts equal $125,000. And if it doesn't, then you get something called a matching notice. And they'll send you this lovely letter that says, we are going to give you a limited scope audit. And so that's one of the risks of being a single member LLC and choosing to file as a sole proprietor. But you can also choose to become a C corporation and file as a C corporation if you're an LLC. Or you can choose to be an S corporation. And you're still an LLC for purposes of the state of New Mexico's laws, but for federal income tax filing purposes, you can be an S corporation. So it depends, and you need advice based on your specific facts and circumstances, what's best for you personally, what's best for your family, because a lot of this stuff rolls into your personal income tax return, and when it gets coupled with your spouse or whatever, and you have all this stuff put together, is that making, at the end of the day, the best choice for everybody involved? And so those are some big picture things that need to be considered when you're saying, I'm just going to be an LLC. I'm setting up this business, that's what I'm doing. So think about that. Other items are, how do you get your equity out of the company? Everybody's worried about how you get your equity in the company. I'm going to get a venture capitalist, or this guy over here said that he's got loan us $25,000, and this guy over here is going to invest X, Y, and Z. Great. Okay, at the end of the day, what are they expecting to get out of it, and how do they want to get that out? You give them a check. Well, what does that check represent? Is it a taxable transaction to them or to you? Has anybody thought about it? Is it a taxable transaction? Will the net that they get out of their investment at the end of the day, is it kind of represent what they really wanted, what their expectation was? Because what happens is, if you go into something with an expectation, and at the end of the day, when you're done with it, you don't get that expectation, then there's disappointment. And some people, when they're disappointed, what do? They're going to lash out. And they do that lovely thing that we do so well in the United States, is they sue you. So you want to make sure that you're protecting yourself. And at the very get-go, maybe your best friend, you guys have been friends since you were 6 years old, and you're doing this great business, but when it comes down to the end of the day with money, and you're talking about growing philosophical differences, usually it comes down to feelings. You may be the most technical person in the universe, at the end of the day, it's all about feelings. Whether anybody wants to acknowledge it or not, it's feelings. And you're going to lash out if you're unhappy, or you're going to, retain something in there, and 5 years later you're going to shop. So while we none of us have crystal balls, and we don't know what the future is going to hold for us, it's always a good idea just to pause and do a little homework, and reach out and get advice from people that have been there and done that, and just have some experience with seeing what has happened to other people. One of the great things about this is my 31st year working in public accounting in the state of New Mexico. So one of the great things that comes with that is not my gray hair. It's it's having seen so many different things. I've experienced all kinds of different business models. I've talked to lots of different folks, whether it's some big, huge, multi continent manufacturer that has chosen to come to New Mexico and build a plant, down to your mom and pop business, and they're at the end of the day they make $10,000 a year. I'm trying to help them out. So there's lots of different things, and people can draw on those experiences. Most of the time it's don't do this because I saw the bad stuff. But all of that knowledge, all those stories, just getting somebody else's viewpoint on it can really be helpful. Just pause and ask the questions. The other things, record keeping, when you're doing legal structure, like I was saying, there's a difference between keeping books and records for Schedule C and keeping books and records for an S corporation. If you're talking about an S corporation, then you really do need a double entry kind of bookkeeping system, which means that you really need to keep a little bit closer eye on your stuff. You probably need a QuickBooks or something similar to that. If you've got a Schedule C, I'm going to say this most of the time, in the real world, you don't see people using a general ledger system or full throttle bookkeeping when they've got a Schedule C business. Most of the time they keep it on an Excel spreadsheet. You're lucky if you find that. Many other times what they do is they'll bring you their bank statements and their receipts. And I've always done to this day that I walk into, I get off the elevator at work and I walk into our waiting area, and especially this time of year, because everybody's coming out the taxes done, and I see so many people with those nice little canvas grocery bags. Everybody's got one of those little canvas grocery bags, and you know what they've got in there. Okay? It's not their QuickBooks file. They've got a whole bunch of little tiny pieces of paper. So record keeping can make or break you, and depending upon the level that you are, depending upon the regulatory environment that your business is going to be involved in, you want to get some advice on what will realistically work for me. Transferability of ownership interests. That's also, that's like ease of formation and closing. Transferability of what you're going to do. It's kind of like the folks I was talking about at the house that have their little roofing business that had it forever, and now they have to transfer some of the business that they've grown and they've worked in for years. They're transfer it to their kids. And how do they do that? Do we need to value their business? Do we need to do a full business valuation of that? Are we going to close out the entity? Are we going to start something brand new? What are we going to do with this? What is the simplest way to do it? What is the most practical way to do it? What does everybody want out of this situation? So those are the important things to ask about. The other big here is the new Tax Act. Whether you like the political environment that we find ourselves in today, that doesn't necessarily matter. What matters is that you need to figure out how this new Tax Act is going to impact you. I remember, unfortunately, back in 1986, when the Tax Reform Act of 1986, I remember how challenging that was, trying to shift gears in our heads as accountants, trying to explain those changes to our client base, and say, okay, we've got all these new changes, all the new tax laws. I don't care whether you like Ronald Reagan or not. That does not matter. What matters is we need to figure out how this is going to impact you, and that's basically what we need to do today. Whether you like it or not, are these changes going to impact you? And you need to get a little advice about that. You maybe some of that. There's been a whole lot of talk about, okay, you need to be aware these things are only going to last until 2023 or 2025 or whatever. In the last 10 years of my career, things usually last about 2 years. So I'm really not all that concerned about things changing in 2025. Probably going to change anyway. Probably going to change in 2020 for tax purposes. So they're going to end up with this new tax act. They're going to tweak it, they're going to tweak it, and they're going to tweak it, and they're going to tweak it, and tweak it. So, I guess my personal advice is don't get so worried about what's going to happen at the back end. Worry about what's going to happen today, this year, and worry about what's going to happen next year, and maybe the third year out. How are these different taxation changes going to impact the way that you're dealing with your life today and how you're going to run your business? Okay, so loans. I started out by saying, oh, sorry, go ahead.
Go back, please.
Yeah.
Look to today on tax happening. Give me years of experience in Mexico. With a new governor in a year, can we expect our tax act to change in the state, or will it be stable across? Or is it too difficult to say?
I was just having this discussion that this was the first time in my career that I actually worked to get a bill passed to the state legislature. So I spent a couple, 3 weeks during this, 4-week session up in Santa Fe watching this process work and, lending my technical expertise and listening to the conversations because people may be sitting in a room trying to figure out how to get what you, from a tax perspective, what you want done. And then people will be out in the halls. I mean, there's so many people there. And, one day, there was a whole bunch of that talking about, okay, Senator so-and-so has decided to really, really worry about single moms and the household exemption. How's this going to work? And are they going to be retaining the same benefits? So what are we going to do with that? And trying to figure all that out. So the answer is probably that's going to happen. The bigger thing that needs to happen, and I think we're starting to build momentum to get that done, is to get Representative Jason Harper's tax reform bill passed. He tried to get that passed, not this 30-day session, but last 60-day session, and it went through the House of Representatives and then it stalled in the Senate. There's a whole bunch of political stuff that went on, and hopefully a lot of that has gone behind us. The fact that Representative Harper is of one political persuasion, and the person that we anticipate is going to be a governor is of another political persuasion. I'm not exactly sure how that's going to coordinate, but realistically, just from a pure tax perspective, Representative Harper's plan makes sense for people in New Mexico. It makes sense because it makes it simpler to be compliant with New Mexico's laws. Whether those laws are gross receipts and compensating tax, whether it's income tax, or whether it's property tax. Our property tax laws in the state of New Mexico have not been changed in forever. And if basically they pass it through, the laws are made at the state level, but it's passed through to the counties to administer. And every single county in the state does their own thing. They have their own forms, they have their own policies, they decide whether they're going to follow this regulation or that regulation. There's nothing there. And it really does need to be addressed. So that was one of the things that Representative Harper wanted to put in place. The other thing is just to make it more equitable. I'm sure a lot of you have heard the term Swiss cheese. New Mexico's tax laws are all about Swiss cheese, and the holes are getting so big it's starting to come along. And that's very true. That is very, very true. It's bad. And so we really need to do that. And so one of the pieces, talking about income tax, one of the pieces of that particular plan is to address the income tax side. And at least the plan that Representative Harper put into place during the last 60-day session, it did have a section reducing the income tax for people in New Mexico. And realistically, this plan reduces taxes on numerous levels. just a matter of getting special interest groups to say, okay, we're going to play ball because on a global scale, yeah, it'll be good for all of the sectors. It's not just the nonprofit sector or not just the medical industry. And so that's kind of the place that we need to get to is looking at it from the big picture perspective and trying to make this a great place for everybody to live, not just for certain industry groups. So anyway, that's my soapbox. But I'm very hopeful that that's going to pass. Representative Harper does have a lot of respect. I mean, I watched him when I had to testify at the House Taxation and Revenue Committee. They turned to him immediately and said, "What Representative Harper, what's your opinion on this? What do you think?" And so you see that there's a whole lot of respect there. Whether our new executive branch is going to feel the same way, I don't know. That's how you discuss. So regardless, we're going to have some changes.
Thank you.
Sure. That's probably more than you want. Okay, so loans. So when you go to get a loan, you're just going to get a loan because you're hoping that you need that extra piece of equity to get your business going, or whether you have grown enough and you need a new facility and you want to buy your own property to put your business on, or whether you need a line of credit because you're not having enough cash flow to make sure that you're paying your employees on a regular basis, and it's causing you a lot of anxiety. So there's lots of different reasons why you want to get a loan. So the things that you need to remember, and these things help you get a loan lots quicker, because if you go in prepared, it's just like going back to school. If you come in with your homework done and it's nice and neat and tidy, and you have it spilled, put ketchup all over it, and doesn't look like your dog chewed on it, and you have this nice little tidy package, you present it to them and say, here's why you should give me a loan. You're more likely to come away with a favorable outcome or something that, towards what you really want. So the things that you're going to want to look at is past income tax returns. So the question when back to should I hire an accountant is, are my income tax returns that I filed and prepared myself, these are business returns or my individual returns, do I think that these are quality products? Were there some issues that I wasn't sure how to handle and I just said, I'm going to go ahead and go for it? Is there something back that is making you uncomfortable? Maybe you want somebody to look at them and see if everything was okay. Because the last thing you want at the end of the day is when you go into your loan package and you prepare your tax returns and the banker comes and says, this isn't right. Who prepared these returns for you? You'd rather have that concern behind you. Other thing is financial statements. A lot of banks, especially here in New Mexico, they're going to be perfectly happy if you generate something out of your books. Depending on the size of your business, depending upon what it is you're asking for, depending upon where how big that bank is, who you're working with, what your goals are. But they may ask you for compiled financial statements. So then the question is, what is a compiled financial statement? Why do I need one? Is it expensive? Well, there are different kinds of compiled financial statements. There's a kind that usually they come from a public accounting firm, because compiled means that you get a letter attached to these financial statements that say, hey, we haven't audited these things, we haven't really reviewed them, we'll put them together with the information that you all provided, and, basically they're pressure. They look okay. We're not putting my 100% stamp on it, but they're okay. And so you get one of those nice little letters. But that letter can have variations on it, it can have exceptions, it can have limitations, all kinds of different things. So what you want to do when you're visiting with a banker is find out, okay, what is it you really want when you tell me you want to compile a financial statement? Do you want it on a certain basis of accounting? What is it you want? So you're going to ask specific questions. And then you're going to want to go interview accountants and find out, do these people do this kind of business usually? Do they just do tax returns usually? And if they do, what's their ability to handle this kind of thing? Talk to your friends. Are they familiar with these folks? So you want to ask about those kinds of things. Projections. Projections usually are something that you can handle yourself because you is best, and you kind of know, okay, if I make 1,000 whatever, I'm going to get this outcome, and this is how I planned it out. So those are usually something that you can have a big hand in preparing. What you want a third party or an accountant to look at is the big picture. Does this thing make sense? And is this anything that a banker is really going to want to know when they ask for projections? Do they want this granular of detail, or do they want something more broad? Accounts receivable, accounts payable details. Well, that would assume, if they're asking for that kind of information, that would assume that you're on a cash basis of accounting. That would assume that you're thinking about that they're wanting an accrual basis financial statement. So then you really need to say, okay, are you asking me for an accrual basis financial statement? Because most new businesses, they're not on an accrual basis. And with that lovely new tax act, more businesses can be on the cash basis. And so that's that's one of the good things that came out of this new tax act. That used to be a $10 million threshold, now it's $25 million. So lots more people are going to be on the cash basis of accounting. And so then, you need to ask the banker, do you really want this? And if they say, yes, I really want this, then what you're going to need to do is get somebody to help you convert cash basis financial statements or bookkeeping records or all of that into an accrual basis so you can provide this kind of detail. For loans, what's a good interest rate for what you're asking for? Accountants can usually tell you, I saw that such and such a bank the other day was offering X to one of my clients, so maybe you should go, get a third opinion over here, go talk to these folks. Terms are the same thing. And the other thing, the intangible thing that an accountant can provide you is relationships. One of the guys that I've worked with for a long, long time, his mantra is, when he's working with the client, is that you need to have a team of people to help you. And a team of people is your accountant, is your banker, is your attorney, is your insurance guy. Those are the four main ones, and you can, depending on what it is you do, you might have others. But you have this core group of folks that you deal with on a daily basis. So when you're in that kind of business as an accountant, these are the players, and you know who is more willing to work with smaller businesses or larger businesses or manufacturers or high-tech companies. And so I would, go over that relationship thing. Ask if the accountant has a personal relationship with somebody that they would recommend that you go talk to. Ask who they know that's willing to, work with folks in a specific industry. So, use that relationship, because accountants, just like anybody else in business, and probably more so, you usually don't think of accountants as having to be salespeople. But when you work in a public accounting firm, you have to, clients don't come to you. You have to figure out how to get them. And so you may be avoiding marketing classes when you go into the accounting programs. I know I did. You avoid them like the plague because you don't want to have to go sell anything to anybody. But accountants really have to learn how to do that. And so having a bank relationship, that's one of the more easy ones to develop. And because bankers tend to be a little bit nicer, so might do sense. Use that relationships. Government dealings. I think we talked about income tax returns and the ones that you've prepared yourself and you're going to be giving to a third party. And the third party is going to rely on those financial statements. And so then the question at the end of the day is, am I okay with these financial statements that I prepared, these income tax returns that I prepared myself? Am I okay with having a third party rely on the information here? Did I feel uncomfortable at any point? Sometimes it doesn't hurt to have somebody else just to look it over. I've had, over the years, I've had lots of folks come in and say, I don't want you to prepare my tax return, but what I want you to do is I'm going to prepare it, and then I want you to look it over. And I'm going to pay you X number of dollars to do this every year. That's all I want you to do is just look it over and tell me if it looks okay. It's high level. Sometimes it's high level, sometimes it's, okay, okay, I'm going to give you my supporting records. Can you look it all over and see if, put everything where it needs to go? And so, you're welcome to ask those kinds of questions. If you only want an accountant to do this one little thing, most of the time they're willing to do that one little piece. All you have to do is ask the question. Never hurts to ask the question. Sales and use tax returns. This one is becoming an even bigger burden. Don't just assume just because all you're doing is working in the state of New Mexico, you think that you're only working in the state of New Mexico, you never leave your little office, but you have a website and people from other places call you, and sometimes you send stuff to other places outside of New Mexico. But I'm only doing the New Mexico CRS1 and I'm good to go. Well, that's not necessarily the case. And sometimes what I specialize in is state and local tax. I do a whole lot of that. And so one of the things that I always tell all of my clients is I want you to be aware of what the rules are. I want you to be aware of what the risks are. I'm not saying you need to go file and register in all these different states. What I'm telling you is you need to be aware of what the ramifications are. And you need to be aware of what to do when you get a letter. And I call them, hey, how you doing letters. California is really good about sending out, hey, how you doing letters. They're very innocuous. It's things like, hi, we read an article in the Business Journal, and you've been doing a great job. You're growing your business, that you're moving here, and here's a questionnaire that you fill out and send it back to us. As soon as you do that, guess what you get in the mail? You get an assessment letter. An assessment means that they want money right now. They're not asking to see returns, they're not asking to see reports. It just says pay me X number of dollars. And then you have to try to backtrack and figure out what to do. Do I pay this? What do I do? So what I tell my clients all the time, and they don't always listen to me. Yesterday, clients I've been working with for years, I found out that they sent their California, hey, how you doing, letter questionnaire back to California. They were all very happy with themselves. Like, oh my God, really, you fix this. So ask the question. Find somebody that you're comfortable with, that is willing to be available to you to answer those kinds of questions. I got a letter from the Colorado Department of Revenue. Can you look at it and tell me if it's something I need to deal with or address? Because you guys are all good at what you do, and accountants are good at what they do. And so you need to just ask the questions. Be aware of what the risks are to you and your business. Because your business can quickly go out of business if you get in a situation where your taxes are going to hurt you. Back to that bill that I worked to have passed in this last legislative session. The reason it was so imperative that we get that bill passed is because we were trying to save the construction industry in New Mexico. And what was happening was that New Mexico Tax and Rev had issued, I found out yesterday it was 25, not 26, but they had issued audit notices to 25 construction companies in New Mexico. And they were going back 6 years looking at all of their CRS ones that they filed. And almost all of these contractors were in a position where they were going to owe a ton of tax. And on top of the tax was interest and penalty. And it was becoming a huge issue. All the different construction industry groups in the state, we all came, put a task force together, and we tried to come up with a resolution for that. So we were very concerned that half of those businesses were going to go out of business. And where is that going to leave our state? If we lose our construction industry, we lose our contractors, are we going to be able to promote economic development in our state if we're losing, this whole industry is getting hammered? So the point of this is your tax returns and that kind of stuff. A trust system. And that trust system is that you're my employee and you're my employee, and I'm withholding New Mexico income tax, and I'm withholding federal income tax, and I'm withholding your Social Security and your Medicare that you're withheld, and it's your money. It's your money, and you're trusting me as your employer with it to take that money and remit it to the federal government or the state of New Mexico. It's basically a pass-through, but you guys are trusting me with it. And so most jurisdictions, meaning the federal government or the state of New Mexico or the city of Las Cruces or whoever it may be, they have implemented big penalties for people that violate those trusts. Because that's really, at the end of the day, that's your livelihood. That is your money, and somebody needs to protect you. And so penalties are huge when you violate trusts and payroll tax returns. So, just remember that one is a biggie. If you're having trouble figuring out how to do those, one of the things I always advise clients is look at hiring a payroll service. That really saves you because it's a tedious process doing payroll, and there's so many forms you have to fill out, and remember time frames for, when you need to remit monies to who, this person and that person. And there are a lot of rules. And so if you can afford to hire a payroll service, get one. That's a luxury that you really should to put at the top of your list, is getting a payroll service. Licensing and registrations, those guys are real important too. And accountants can help you navigate that. The biggie that I like to tell everybody about, the biggie is your Secretary of State. You want to make sure that you've registered with the state Secretary of State. If you're an LLC or a corporation, S corporation, one of those kinds of things. If you're that kind of business, sometimes even partnerships, depending on what that state requires, you want to register with the Secretary of State. The reason that you want to register with that Secretary of State is if you are sued in that jurisdiction and you have not registered with that state, then you are doing business in that state without authority. And so you have no leg to stand on in a court in that jurisdiction. And the ramifications can be very bad. Plus, in some states, if you haven't registered and they catch you, the penalties are huge. Texas is one of those. If they catch you, and I'm trying to remember off the top of my head how many days you have. I want to say it's 90 days. You have 90 days to register with the Texas Secretary of State before incurring very large penalties. But Texas likes to make their money that way. And they will catch you and they will start fining you. So it's important to figure out, where am I doing business, whose rules say what, and register with those jurisdictions, just to keep you safe. And accountants can the cool thing about this is accountants can show you how to do this. This is something you can even, a lot of times what I do is I send people links and say, you know what, why don't you look through this, see if you're comfortable doing this yourself. I'm here for questions, but I know you're a brand new company and you're fee sensitive, and so what I do is I said, okay, here's a form, or here's the link to how you do this, and if you're not comfortable with it, call me. And a lot of times, folks, once you show them where to look and what to do, they're good to go. And they sign up for annual reminders. A lot of the Secretary of State sites now, you just click a box and they'll send you an email that says, hey, time for you to put in your annual report and pay your $25 to us or your $150 to us. And so that works really well now, and it's not something you have to pay an accountant to do. An accountant can do it for you, or there are companies that do it for not so much money. They do that as well. And then there's this dreaded thing, and I tried to find a scary font. It's called audits. I would not advise that anybody does audits, handles an audit without getting advice from an accountant that does that kind of work. Your regular Joe accountant that you've hired a CPA that does your monthly bookkeeping, and they do your tax return on an annual basis, they may not even be the right person to deal with your audit. When you're dealing with an audit, and depending on how complicated it is, what you may want to do is you want to find somebody that specializes in that particular area of taxation. And in dealing with audits is called tax controversy. And there are some folks that they do federal tax controversy. Some people do state and local tax controversy. situation, it's a good idea to do that. Do you absolutely need to hire an attorney? I mean, I hear so many people all the time say, I'm going to hire a tax attorney because I'm getting audited. I don't usually advise that, because a lot of times what happens is the tax attorney calls me, because one, my billing rate is less, and two, it's usually more accounting oriented. Because at the beginning of an audit, what you're going to be doing is you're going to be looking at all the data. You're going to be looking at the general ledger, you're going to be looking at all those underlying transactions to see if you've been compliant, or see if whatever it is that the state or the federal government has said you're doing wrong, that you really are doing wrong. And then, when it gets to that point where you really do need an attorney, you hire one, and it won't cost you as much money. So it's important to kind of figure out, and by getting advice, and I get a lot of calls from, small mom and pop CPA firms. They call me because I specialize in state and local tax, and so they trust me to handle that kind of situation, because that's what I do all the time. And so they'll call and they'll say, okay, one of my clients got a matching notice from the state of New Mexico, and I'm worried because my records show that they really don't match, and I don't know what to do with this. Can you give me some guidance? And we figure out a fee structure that works for me and the other accountant, or for me and the client. And we'll figure that out together, what works best for everybody. And sometimes it's just pointing you in the right direction. What you need to do is look at here, and then you need to tell them this, and then it'll go away. And sometimes it's really just that simple, but if you don't do that kind of thing all the time, then you don't know that it's just that simple. Okay, so your business is, I'm starting to run out of time, so hopefully I'll get to go through some of these. Your business is growing. So if your business is starting to grow, that's probably the time you need to make an appointment with an accountant and say, I just like an initial meeting with you. Here's my situation. I just got this big new contract, and I'm going to have to hire 5 new people, and I'm a little concerned about being overwhelmed. Can you tell me what you would advise? And let them talk. And you're going to figure out, based on what they're telling you, whether you feel comfortable with that. Accounting relationships, it really isn't a relationship. You stay with your accountant because they get you, they understand you, you communicate well, you like each other, and you trust each other, because this person that you hire is going to be dealing with your money. And when it comes to dealing with somebody's money, it's very personal. So accounting relationships, they tend to be very personal. So when you're sitting down, and a lot of times, that initial meeting with an accountant, it's free. So you can go visit 5 if you want to. And just try and find the one that works best for you. Do you like what you hear them saying? Are you a very technical person and you want to hire or work with somebody that's very technical and kind of uses those buzzwords that you've heard or you've read about? Or are you somebody that wants to make sure that person talking to you makes eye contact and they smile and they tell jokes and they laugh with you and you just feel really good about it? You need to find the person that fits you best. You also want to find out if they're familiar with your industry. You want to find out if how long they've been working in the jurisdictions that your business is involved in. Are they familiar with the compliance guidelines that are going to apply to you? So those are the kinds of things you want to think about. I think we've kind of touched on selling a business. If you're going to be selling your business, you really want to get some sort of advice or help with that. It's so much easier to create a new business as far as licensing and registrations and getting everything set up. That's so easy. Getting out of it is hard. So one of the things that I always ask my clients when they tell me I'm done, it's like, are you really done? Are you really done? Are you just done for like right now, or are you just having an itch to go out of the country for a year and then you're going to come back in 14 months and say, hey, I'm ready to do my business again? If that's the case, then you don't want to close everything out. You just want to pay your fees and your licenses and keep everything open and just file whatever reports need to be filed, 0 reports, because getting out of a business is a pain. There's lots of forms to fill out, there's lots of hoops to jump through. You gotta make sure you jump through the right hoop at the right time, and each one of those processes costs money. And so make sure that's really where you want to be. Or if you're just tired for right now, or it's not really, now's not the time, because you missed that one opportunity, but you see that it's coming again in 2 years. If you've already laid out all the groundwork, it might be a good idea just to leave that groundwork there, because getting out is difficult. Okay, so one of these, I put one that says dollars and cents. Okay, so how do you figure out whether you're going to get an accountant? How much is my time worth? How much is your time worth to you? And so that's one of the things that you figure out is the value of $1. How much is your time worth? Is your time better spent, poring over an Excel spreadsheet, or trying to figure out how to make your QuickBooks balance, or figuring out what that big exclamation point is that keeps popping up every time you try to input something? How much is it worth to you? And do you have the expertise? And has your business gotten complicated enough that you don't have the expertise to do it? It's like the gal that came in and said, TurboTax doesn't do R&D tax credits. I need your help. Do I have to pay the accountant by the hour? The answer is no. No. You pay the accountant based on whatever arrangement that you can come to. Most accountants, they want to help. Some are adamant about charging, or we charge by the hour, or we have a fixed fee for, this kind of tax return is going to cost you $500. I would look for an accountant that is willing to be a little flexible in the way that they do their fee arrangements. As I mentioned, sometimes all you want is for somebody to do this one little itty bitty thing. And are these folks willing to do that one little itty bitty thing? If they're not, maybe they're not the right person for you. What happens if you don't know what the accountant is telling you? They're being too accountant-y. They're using too many terms that you don't understand. That happens to me all the time. I get so excited about what I'm talking about, I start using all these terms, and I start citing code sections and statutes, and I start using all this stupid language that regular folks don't understand. And it's okay to say, well, time out. I'd like you to explain that to me in terms I can understand. And it's okay to do that. Don't feel intimidated, because you know what, you've got expertise that person doesn't have. That's what makes the world go around, is we all have something to offer and contribute. And most likely it's that person that you're talking to is really excited about what they do, and so they're just sharing. And they're not doing it to make you feel bad, they're just excited about what it is they do. And they start talking in terms that they like, but you may not. And should you get a second opinion? Absolutely. Absolutely get a second opinion. Tax law in particular is gray. Some is more gray, some is a little bit more black and white. They call them bright line tests. So if you hear that term, is there a bright line test? Sometimes there is. And even when there's a bright line test, then you have, you're coming up to the bright line and you're kind of going down, and is that the gray area that you always want to figure out, what is the risk that I'm willing to take? I call it, this is rude, but I call it the gag reflex. At what point are you going to be really uncomfortable and it's just going to make you feel like you're going to fall over, die, and start throwing up? When you get to that point, you absolutely need somebody to help you. Really, that's when you need somebody to help you. It's just overwhelming, and the amount of, you've got a tax letter and it says you owe X number of dollars and you have no idea what to do with that kind of stuff. Ask somebody to help you. Okay, so I found this great article earlier this week. And it's called When to Hire an Accountant, and I provided a copy here. And I like this article so much, I started making notes on it, and so you'll see all my little scribbles on this thing. And it had some great takeaways. And I kind of summarized those as the last slide here. And, you know, well, one of the points that it talks about is, okay, one of the partners that I'm starting my business with has an MBA in finance. That person can handle this. Okay, so the question to ask is an MBA in finance the same as somebody who's an accountant? An accountant does not necessarily need to have an accounting degree. An accountant is somebody who knows how to do books, keep books and records, knows what a double entry accounting system is, does the debits and credits, and create a financial statement and a general ledger. Is that MBA in finance, does that person know how to do that? Because I know when I took finance classes when I was getting my accounting degree, we really didn't touch on anything accounting related. So ask yourself, is that something that I'm comfortable with? What's the difference between an accountant and a CPA? So, I read this article years ago that you can only be referred to as an accountant if you are a CPA. In this day and age, you know, you see lots of people being referred to as accountants. And as I mentioned, you don't necessarily need to have an accounting degree to do bookkeeping, and you don't need to have an accounting degree to be a CPA. You need to have the accounting hours in the state that you're in to sit for the CPA exam, but you don't have to have an accounting degree. Good example is I used to run a cost segregation practice for a national firm, and I needed to hire somebody that had more of a construction background. And so I found this great guy. He was a purchasing director for a very large home builder in Houston, Texas. And so we got along well. He decided to move his family, and they came to Albuquerque. And here he is working. You know, he's a guy with a construction management degree from Texas, and he's working in a public accounting firm. And he realized right away that, you know, while he got along with everybody, they were using terms, and he was viewed differently. And so I suggested, well, maybe you want to go see if you can get some accounting hours. He went to CNM, got his accounting hours, and sat for the CPA exam. And he has no accounting degree, and he's a really good accountant. So, you know, those are questions to ask. CFO for hires, controller for hires. Those are really cool things that many CPA firms are offering today. In fact, a lot of CPAs have decided they prefer to do that kind of business than just doing straight up compliance work, meaning straight up bookkeeping or tax returns. They prefer going out there and advising folks, helping them get to that point where they're, you know, able to hire a full-time person or just provide that level of advice. And so that may be something that is better for you than hiring a full-time person dealing with the payroll and the benefits and all that stuff, is to hire a third party, a CFO for hire. They come in, you know, 4 hours a week, or a controller for hire, and they come in 2 days a week, and they help you with that stuff. And then there's some sections in this article that talks about how to prevent and deal with fraud. Number one thing is bank reconciliations. If you reconcile your bank, you know what your cash is all the time. Cash is king. You got to know what your cash is and make sure that you have control over your cash. If you've got your cash down good and you're making sure that there's controls around it so that one person doesn't have access to it all, I mean, unless you're your own business and it's just one only person, but if you've got a small company and you're trusting a bookkeeper with all the cash functions and all the payroll and bookkeeping functions, that's creating an environment where they may want to, they may end up being in a situation where they could steal from you. And maybe they don't want to, maybe they're really good, honest people, but maybe they're having a horrible situation in their personal life, and because you've created an environment for them that makes that open, it can create bad news for everybody. So does everybody know the difference between GAAP financials and off-BOA financials? So GAAP is generally accepted accounting principles, you know, that's really for big companies. And off-BOA is other comprehensive basis of accounting. That's tax basis, that means that your financial statements look the same as your tax return, or it's cash basis, or there's lots of different, you know, they could be a modified cash basis, there could be lots of different things. If your bank is asking for something or third party's asking for something, find out what it is they want. What, what basis of accounting do they really want? And I think that is it. I think I touched on all the biggies. Questions?
You mentioned that the regulations and the high hierarchy letters, like how does that work with neighboring states? Say, because we're like down the street from Texas, especially El Paso, like how does that work? Do you go to the Secretary of State from Texas, find out what they want, or is it maybe not as complicated as say a state in California, which is a couple states away?
The answer is always going to be it depends.
Okay.
And it depends on what kind of business you're in. Are you selling a service? Are you selling a license to use? Are you selling a tangible item? Generally speaking, most every place but New Mexico, if you're selling a true service, it's usually not taxable for sales and use purposes. But I say generally not. Texas has this list. It says, oh, services aren't taxable except for, and it goes, so that's one of the things that you need to figure out is they may say generically, this is not taxable, but then you need to read the fine print. And every state is different. And that's very unfortunate, but it's the way it is. All states are different. So if you're doing business here in Las Cruces and you're doing business in El Paso, then yes, you have two jurisdictions that you're working in. You're probably going to have receipts from New Mexico that are due to the Taxation and Revenue Department, and you're going to have receipts that are due to the Comptroller's Office in Texas. And so you just need to make sure, are the receipts taxable? Do I have a taxing requirement? Do I need to register? And most of the state websites, they make it fairly easy anymore. Registrations are fairly easy. A lot of states have moved to a one-stop shop, and so they'll have a big thing on their main website that says, there's a one-stop shop for registering, and you click on that, and then it's kind of like TurboTax. It asks you the question, are you going to have payroll? And you say no, and so then it takes you to the next screen, and those kinds of things. A lot of states have those. New Mexico doesn't, but a lot of states are moving to that. So it makes it a little bit easier. Yeah. Go ahead.
Quick question. When you pay taxes, and this might be like a very simple concept to understand, but when you pay taxes, do you pay tax on revenue or on profit?
The answer is it depends. What kind of tax? So income tax, generally speaking, you're paying on your profit. And the profit is not necessarily what you're showing on your books and records. It's the way that you figured out what is taxable revenue, and then you subtract out expenses that are deductible from income tax, and then that comes out with your net taxable income. For sometimes sales and use is based on your gross receipts. Like New Mexico, it's receipts, and so it's not based on profit at all. It's based on how much money did you bring in. We don't care about your expenses.
And then one more question on that also. I've heard that just to be safe, whenever you're starting up a business and you're going to be selling, for example, like T-shirts or something, to take into consideration about 30% will be going to taxes. Is that a pretty good estimation?
No. Okay, so I'm just going to say, one, it depends on what type of entity you are, what your tax bracket is. So if I'm going to use an example, if you're a single member LLC and you're reporting on a Schedule C, so it gets on your 1040 form, you're absolutely, if you have any profit, that's going to be subject to 15.3% self-employment tax, which is your Social Security. So it's got that right off the bat. And if there's profit, and at the end of the day, your federal income tax return comes down with taxable income, depending on what tax bracket you fall into, then that gets added to that. And so that's just the federal piece. And then you have a state income tax filing requirement. In New Mexico, it's approximately 5%, a little bit less. And then you may have a sales and use tax requirement. And if you do it again in New Mexico, it's about 8% that you need to save tax money for. So all of those different things, and it sounds awful when you start adding all those numbers up, it's probably more than 30%.
Okay.
Anybody else? Thank you, guys.
Yeah, thank you so much. Thank you, Bobbi Kay. And for those of you who are part of Studio G or the Arrowhead Venture Program, Bobbi Kay is one of our advisors, so if you have any other questions, please sign up for times with her throughout the month. So, thank you. Round of applause.
Thank you.